Hey everyone, welcome to Fast Pass University, where we make passing your insurance exam simple, clear, and stress-free. So glad you're here. Whether you're studying for life and health, property and casualty, or personal lines, this channel is all about helping you understand the material, not just memorizing it. Here you will find state law lessons, exam walkthroughs, study strategies that actually make sense, all of that good stuff. But before you dive in, please make sure to check out our website at fastpassuniversity.co. That is .co. Where you can download study guides, workbooks, other resources to follow along with these videos. And if you want live help, tutoring, or studying alongside other students, join our FastPass community on School at school.com/FastPassUniversity. It's our private hub for live classes, instructor support, and a place to ask questions anytime. I'm so excited to help you start your insurance journey. Let's get you your Fast Pass. All right, in this lesson, we are going to cover Florida laws, statutes, and regulations specific to the general lines exam. If you haven't already, make sure that you watch part 1, Florida laws and regulations common to all lines first. That lays the foundation for what we're building on here. I will put that link in the description. Today, what we're going to go through are the laws and regulations that are specific to the general lines exam. But on all of your insurance exam licenses in Florida, there'll be 2 parts. The first one is that section that is the laws and regulations that are common to all insurance lines, no matter which exam you're taking. And then there's this part 2, the second half of the state laws and regulations, depending on which line of authority you are testing for. So this is going to go over those general lines, rules, and regulations for Florida. However, a good portion of the questions on your regulation sections are going to be found in that video 1. So please go watch that one first and then come on back to this one. Okay. So we are going to go over property insurance contracts and the auto insurance rules and regulations. A couple things may be repeated from the first section, but there's going to be definitely some things in that part 1 that we will not go over here. So again, please make sure you watch that first video. All right. Understanding Florida's renewal, non-renewal, and cancellation rules is fundamental to operating legally in the property and casualty insurance market. These rules apply to commercial, homeowners, personal, and casualty policies. Pay special attention to the specific numbers and timelines and things like that. And we will be pointing out some common exam tips, ways that you might see the questions worded, etc. So we are going to help you make sense of this section that can be, a little overwhelming, a little intimidating, kind of boring, but we're going to help you pay attention to what's the most important stuff that you need to focus on and what you will most likely see on your exam in relation to those. We'll even do some practice questions at the end. All right, so we are going to talk about non-renewal and cancellation notice requirements. This is how long an insurance company has to provide notice if they are going to either non-renew or cancel. Okay, so we'll start with non-renewals. What does that mean? Non-renewal means that at the end of your policy term, the insurance company has decided not to allow you to renew. They are not going to renew your policy. They don't want you with their company anymore. They have to give a notice within 45 days. Okay. They have to give you 45 days before the expiration of your policy to give you time to go find another policy, to give the customer that time. So let's use an example of homeowners policies and commercial policies are generally written on an annual basis for 1 year. Sometimes we see 6 months, especially with auto policies. But for this one, we're going to say it's a homeowners. And let's say that you bought the policy in April of 2025 for a year. So it is good until April of 2026, if you haven't canceled, and they decided they don't want to renew you when it comes to after April, right? They don't want to renew you, so they must send out notice within 45 days prior to your renewal date to give you enough time to go find another policy. Now, if it was a cancellation, that would be anything that happens in between, right? So anything that's between the renewals, it would be considered a cancellation, not a non-renewal. Now, there are two ways that cancellations are categorized or thought of, right? And one of them is cancellation for non-payment, and the other one is cancellation for any other reason. So for non-payment, they only need to require a 10-day notice of cancellation. Now, it's because there's probably also been a grace period in there. Usually, let's say 10 days. We're going to get to those. But you haven't paid your bill. So now they are going to cancel you. They have to give you a 10-day notice that they're going to cancel the policy. If they want to cancel your policy for any other reason, than non-payment, then it must also be given 45 days notice. Okay. So I like to think that with this one, the shorter one, the 10 days, is that there's already probably been some kind of grace period, right? Also, they haven't received any money. A non-renewal, they've been paid for the year. Cancellation for any other reason, maybe some kind of policy term, or they've had some changes, things like that. They need to give you more time, 45 days. When you haven't paid, they're giving you less time, right? They care more about getting that money, right? So you're going to have less time when it comes to not paying the bill. Exam tip: homeowners policies cannot be non-renewed solely for property, age, or hurricane claims. This protection helps ensure coverage stability for homeowners. Okay, so if let's say you've been with an insurance company for years, and now certain insurance companies, right, they may not write homes that are older than a certain date. So they may not write new policies on, let's say we don't write new homeowners policies before, if a house was built before 1940. Okay, I'm just making this up. But you bought this policy years ago when they were writing them. They can't cancel you because of the age of the home. They can't non-renew you solely for the age of the property. Okay. They can because, other reasons plus that, but not solely for that, or hurricane claims. Okay. So they can't cover you. Then you have a hurricane claim and being like, we're not going to renew you. That costs us too much money. Now, again, there are other reasons they can, but the important word here is solely. Right. I like to think, especially when it comes to the insurance exam, is that nothing in life is that black and white. Nothing is that exact. So when you see words like solely or only or completely, pay attention to those questions and see, how they're asking it. So this is an exam tip, meaning this question's been come up in a couple different ways on the exam. So we wanted to put those there. All right. So 45 days for non-renewal or cancellation for any other reason, 10 days for non-payment. Proof of loss requirements. So this has to do with claims. So Florida law establishes specific requirements for proof of loss submissions to ensure proper claims processing and prevent fraudulent claims. So these are some other time frames that we're just going to need to know. The insured must submit a signed proof of loss within 60 days of request by the insurance company. Okay, so a signed proof of loss. You may be able to call in your claims and say, hey, I've had an insurance claim. I want to file a claim for my home or my auto or etc. And then they may send out some documents, and that needs to be signed and sent in within 60 days of request. Required documentation: proof of loss must include detailed information about the claim, damages sustained, and supporting documentation. So any important documents, pictures, repair bills, things like that need to go along with the claim. Those need to be included. And timing requirement, 60-day deadline from the date the insurer requests the proof of the loss. This is the timing requirement, is critical for claim processing. Okay. So basically 60 days when we're talking about claims. Okay. All right. So a critical point, failure to submit proof of loss within the required time frame can result in claim denial or delays in a claim settlement. So the exam question could be as simple as, within how many days must an insured submit a signed proof of loss? Within 60 days. Um, but the question could be more a bit trickier, or giving you kind of a scenario and saying, an insurer can decline a claim for all of the reasons except, or things like that. So make sure if they're saying, um, if the person hasn't submitted the proof of loss within the required time frame, that could result in a claim denial. So it could say, the insured failed to submit the proof within 60 days, or the insurance company declined a claim because proof of loss wasn't submitted until 75 days, etc. So just know that, yes, they can deny a claim for not following these timelines. All right, payment of claims. Florida claims payment statute establishes strict deadlines for insurers to ensure prompt and fair claim resolution for property insurance. So they put some of those requirements on the insured, like we talked about in the last slide, because the insurance company also has strict rules that they need to follow. So they have 90 days to pay. Insurer must pay or deny property claims within 90 days of notice. This includes investigation, evaluation, and final determination. Okay. So if somebody calls in and says, hey, there was damage to my home, I want to file a claim. And then they say, okay, we're going to send you this out. Please sign this proof of loss form, submit any documentation, and get those back to us. And they're still giving that 60-day deadline. So if somebody takes that whole 60 days, they only have 30 days left to rock out the rest of it, right? So it's actually pretty generous on their end. But so for the insured, it is 60 days, right? Insured is the customer. Ed is insured. That's how I always remembered it, as it's the individual. But the insurer has 90 days. So make sure when you're reading the question who they're talking about. So they must pay or deny. So not every claim that comes through is going to be approved. Insurance companies would be out of business if that was the case, right? So if they are not going to pay, they need to send out written notice on why within those 90 days. So they either need to, include the investigation, evaluation, and final determination, and send that check within 90 days. Or if they are denying it, they need to send out that they are denying it within that 90 days with an explanation of why. Failure to comply with the 90-day requirement can result in interest penalties being assessed against the insurer. So they would have to pay interest for, delaying claims. And prompt and fair handling. Claims must be handled promptly and fairly with proper investigation and evaluation of coverage and damages. They can't just be like, I don't feel like it. Let's just deny this one, right? They have to follow steps and procedures and investigate it. And they also only have 90 days to do so, so they better get on it, right? Premium financing. Premium financing allows policyholders to finance premium payments through a third party, providing flexibility for large commercial policies and personal lines coverage. So some insurance policies can be very, very, very expensive. Think about like a giant warehouse or factory, or a huge corporate chain, Target, right? Some of these policies can be very, very, very expensive. Even still, personal auto and homeowners policies can be very expensive. So there is premium financing available so that they can kind of almost get like a loan, right? They can finance that payment to the insurance company. So they do allow third-party financing, allows policyholders to finance premium payments through a licensed premium financing company instead of paying the full premium up front. Now, this has to be through a licensed premium financing company. Okay, it cannot just be, someplace down the street that you turned in some gold jewelry for and got a loan for. Okay. Statutory notice requirements. Cancellations of premium finance policies must follow the same statutory notice requirements as direct pay policies. Basically saying that if they're going to non-renew or cancel or things like that, that they need to follow those same kind of rules, and that this company also must, make their payments on time, just as that you're held to the same responsibilities on both ends. Unearned premium refunds. Unearned premiums must be refunded within 30 days of cancellation to ensure proper handling of policy funds. So, if a policy is canceled and, normally it's paid for, especially on commercial policies and homeowners policies, for a year, right? So, again, we'll do that April to April. And usually they pay it for the whole year, but if they cancel it, there would be some funds available within, here that needs to be refunded. That must happen within 30 days of cancellation. So remember that. I know we're coming across a lot of timelines, but make sure that you're writing your flashcards, things like that. We have the workbooks that you can fill out. You can get on our website with the fill in the blanks. Just get really familiar with the differences, because if you can memorize the difference between these, that's several exam questions that you could potentially see. Okay, so the key benefits of premium financing. For policyholders, it spreads large premium payments over time, improving cash flow management for businesses and individuals. If this is $100,000 insurance policy, having to pay that every April could be, difficult on the company to be able to spread that out. And how this benefits insurers, the insurance companies, they are able to receive the premium payments upfront from the financing company, reducing collection risks and improving cash flow. So while it may be hard for this person to come up with the 100K, it's hard for the company to not receive that 100K. So again, these are made up numbers. That's when a premium financing company would come into play. They must be a licensed premium financing company. They must follow all the same rules and guidelines. And if a policy was canceled or non-renewed and there happens to be some unearned premium refunds that are due, they've got 30 days to send those out. All right. Okay, so moving on. Hurricane and wind protection. Florida's unique hurricane exposure requires special provisions and coverage to protect policyholders from windstorm damage and catastrophic losses. So the hurricane deductible, separate hurricane deductible applies, usually 2 to 5% of dwelling limit for named storm damage. So let's say your homeowner's policy, it's regular deductible is $1,000 for claims. And if you need to learn more about the homeowners policies, check out our site for more videos on that. We also have some courses on our website, etc. We're not going to get into details on all of these property policies and things like that, because what we're focusing on is the state laws and regulations. In my opinion, this should be kind of the last sections that you go over once you already have a solid foundation on, property and casualty, or whatever it is that you are studying for before getting onto the regulations. So, what they're saying here is that the hurricane deductible is a separate hurricane deductible, because the lower your deductible is, the higher your premium is. So if you wanted to have, let's say you wanted to match that $1,000 deductible, if that applied to hurricanes as well, it puts them at like a bigger risk, and it also makes your policy much more expensive. So the hurricane deductible is separate. And it is usually 2 to 5% of the dwelling limit. So, if we're talking about a property that's $100,000, we're looking at $2,000 deductible, right? Most properties are, valued higher than that, sometimes much, much higher, if we're talking about coastal properties. So just imagine what 2% to 5% of that could be. That deductible is going to be a lot higher than the deductible that you want for regular claims on your home. Windstorm coverage. Windstorm is covered only if it is included in the policy or via the Citizens Wind Pool for eligible properties. So you need to add her windstorm coverage, right? It is covered only if it is included in the policy. So there may be, depending on what company you go to, it may be included in the policy. It may be something that you need to add as an additional coverage. Wind mitigation discounts. Premium discounts are available for wind resistant features such as shutters, reinforced roofs, or hurricane clips. So there will be discounts on the policy if you have things in place to help protect the structure in the event of a hurricane or windstorm. Exam tip. Remember that hurricane deductibles are typically 2 to 5% of the dwelling coverage limits, not flat dollar amounts like regular deductibles, and that it is a separate deductible. And know that it is only covered if it is included in the policy or via the Citizens Wind Pool for eligible properties, and that there are discounts available for reinforcing the home to better protect against those things. Catastrophic ground cover, collapse versus sinkholes. Okay, so Florida distinguishes between two types of earth movement coverage, each with different requirements and scope of protection. So, catastrophic ground cover collapse. It covers only structural collapse with visible damage. Requires sudden, abrupt collapse that renders the dwelling unfit for its intended use. Okay. Insurance in general, it only wants to cover things that are kind of sudden and unforeseen. If the house has been, falling over for years and has not been maintained and slowly kind of collapsing, it may not be covered. These are kind of sudden, abrupt collapses. That, obviously, if your house collapses, it's probably unfit for its intended use. Just means if you can't go back and live in it, right? Sinkhole coverage. It's optional. It's a broader coverage that includes gradual settling and structural damage, even without complete collapse. So this is optional. It's something you'd have to add. And this is going to cover something that maybe happens over time, not necessarily because the house is, the not in a condition to stay standing, but because of, sinkhole and earth movement below. So these have to do with earth movement, okay? Earth movement coverage. Um, Sinkhole coverage it's broader. It may cover for some of those things that weren't necessarily covered in this catastrophic, immediate structural collapse. These can be gradual settling that causes damage and maybe without complete collapse, right? So there's some earth movement sinkhole and it just screws up the front porch, right? So there may be coverage for that if it was added to the policy. It's an optional broader coverage. The whole house doesn't need to come tumbling down for this one to come into place. Coverage elections. Policyholders can elect sinkhole coverage for broader protection, but must pay an additional premium, right? Anytime you're adding something to a policy, it's going to cost more money. So understand the difference. Catastrophic ground cover collapse. I mean, it has the word collapse in it. It's catastrophic. It's the whole house came down, right? Sinkhole is broader and it's gradual settling and just structural damage in general that doesn't require complete collapse. But it's going to need to be added to the policy and cost more money. Some additional property coverages, fungus and mold coverage, limited coverage with typically a $10,000 cap unless additional endorsement is purchased for higher limits. For HO6s, condo owner policies must offer at least $2,000 in loss assessment coverage for special assessments by the association. So usually when somebody has to come in and check for a fungus or mold claim, it's going to need a special assessment, somebody that is certified in this, a company that specializes in this. So condo owner policies must offer at least a $2,000 in loss assessment coverage to allow for those special assessments by the association. Okay. because with those, you're sharing walls in, or no, you only own walls in, you're sharing some walls, you're sharing some common parts of the building with other owners, so it needs to allow for that coverage to be on there. So know that HO6 is $2,000 for that loss assessment coverage must be included. For any other type of property policy, it would need to be added, and it is usually a limited coverage, typically $10,000 cap. It's going to depend on what company you go with, and things like that. And standard exclusions. Policies exclude war, nuclear hazard, intentional loss, wear and tear, and flood unless specifically endorsed. You should know that from going over your homeowner's policies as well. And if not, go on and make sure that you have a full understanding of what is generally covered and generally excluded when it comes to property policies, because this is not new news. All right. Flood insurance offered through the National Flood Insurance Program, NFIP. Standard homeowners policies exclude flood unless endorsed. Okay. So, NFIP. They could ask it a question about, who writes or underwrites or issues flood insurance policies. They are offered through the National Flood Insurance Program. So know this acronym and know what it stands for, because they may give you just an example of 4 names that sound very similar. It could say National Flood Hurricane Program, just kind of throwing in some, I don't know, some different words that they could use as the example. So you need to make sure that you know where flood insurance is offered through. It is excluded from homeowners policies unless it is specifically endorsed or added. Usually it's a separate policy. Okay. Flood insurance is almost never covered on a home in almost any state. It's ran through the National Flood Insurance Program or other programs. Loss settlement and dispute resolution. Okay. Florida provides multiple mechanisms for resolving coverage disputes and determining appropriate loss payments. Okay, so when there is a claim and they're trying to come up with that dollar amount, on how much the insured should receive, how much the insurer should pay out, there are some different ways that they come up with these, and then different ways that they resolve any disputes that might arise. So, loss settlement basis based on replacement cost value or actual cash value, depending on the policy terms and coverage selected. Um, again, much more detail on RCV and ACV in the property sections of your course, or wherever you're learning this. Also check out, any additional videos we may have on this. We also have some partners where you can get some courses with as well. Dispute resolution options. They may involve appraisals, mediation, or arbitration. DFS provides mediation programs for property disputes. So, in the policy term, basically what it's saying, that in the policy that you write, in the policy paperwork, it's going to say whether that home is valued at RCV or ACV. Whether they're going to pay it out from replacement cost or actual cash value, depending on that policy terms. If they say, hey, we think it's worth this amount, this is how much we want to send you for your claim check, and the insured is like, no, that is not acceptable, I want this amount, and they can't come to some kind of resolution, right? And the insurance company is trying to handle that within 90 days, but the insured is like, nope, that's not going to do. We can't figure this out. There are appraisal, mediation, and arbitration options available and included in the policy terms. Same thing. Before somebody even purchases the policy, kind of explaining these steps and, what options there are should that happen. Loss payment timeline. Insurer must pay within 20 days after receiving agreement or 60 days after judgment. So, reaching agreement, right? So they've met with the mediator and they've figured it out. They've been going back and forth and they've come to an agreement and they've all signed it. The insurer, the insurance company, must pay within 20 days after agreement. 60 days after judgment. Judgment means a judge was involved. That means they could not mediate. They could not come to an agreement, right? They had to get a judge involved to determine, to kind of make that final decision, right? So that's why they try to get all of these things figured out first and kind of like, hey, if you guys got along and all agreed to it, cool, you're going to get that payment in 20 days. If you guys cannot figure this out and you need to go before a judge and the judge has to come up with the final decision, then the insurance company has 60 days to send that payment. Okay. So the judge is involved. This has gotten out of hands. 60 days. You guys agreed, came up with something, 20 days. Okay, types of insurers in Florida. We spoke about some of these in video 1, but we're going to go over those again because they do fall in that content outline specific for this section of regulations, statutes, and laws for general lines. So Florida insurance market includes various types of insurers, each with different regulatory requirements and market functions. Okay, so admitted insurers, we talked about this a lot in video 1. What is the other word that you may see for admitted? And it is authorized. Right? So they are licensed in Florida to transact insurance and subject to the Office of Insurance Regulation, OIR, supervision and regulation. And remember, if somebody is authorized or admitted, they have a certificate of authority. That certificate of authority is what makes them authorized or admitted. And we think of that as kind of your ticket to transact. It is the ticket to transact insurance. It is your license. It is your certificate of authority, the certificate that gives you the authority to transact insurance in the state of Florida, right? If somebody is non-admitted, we're going to jump over here. They are what we also say as unauthorized, right? So what do you think that they don't have? Non-admitted equals unauthorized. So they do not have a certificate of authority, but they are able to, write some policies in the state of Florida. If they are a surplus lines insurer, they still need to be filed and registered. They need to be listed with Florida as a surplus line insurer. We're going to see these for, very unique situations, hard to write policies. This is where, celebrities insure their face or their vocal cords or their legs or, hard to value or appraise artwork, etc., things like that. So if there is no other company in Florida that writes those, there are some surplus lines insurers that are, listed and kind of approved by the OIR to write certain policies. So surplus lines insurers, they are non-admitted or unauthorized. They do not have a certificate of authority, but they must be a licensed surplus agent with the state of Florida. Okay. Okay. Reciprocal exchanges. These are, I don't want you to confuse these with mutual companies, which we go over in detail in, again, part 1, which is linked in the description. But reciprocal exchanges are owned by its members, right? So make sure that when you're seeing a question, to continue reading on and make sure that they're not looking for mutual, because they're usually going to throw these all in together. Which of the following is this? And they're going to throw words that are similar. So a reciprocal exchange it's a unique type of insurance exchange. It is members that insure each other through a pooled risk. They are managed by an attorney in fact. So if you see that in the description, then it is a reciprocal exchange. They must have an attorney in fact who handles the operations and claims. It is a organization, like I said, that is owned by its policyholders or subscribers, and they agree to insure each other. They share the associated risks and potential profits. They pool their money all together, and if one member needs something covered, it'll take care of that. But if there weren't a lot of claims, they're going to share in those profits as well. However, these aren't just like a small group of just like 10 buddies. These are USAA, AAA, things like that. There are certain ones that are just the condo owners reciprocal exchange. They're not going to ask you examples like that, but what you need to know is that it is managed by an attorney in fact that handles the daily operations and the claims processing. And the subscribers or owners or members, they will receive dividends if there is a surplus after claims and everything at the end of the year. And that it is a group of members who pool their risks, right? They pool their risks and um, hope to pool the profits, right? So just make sure that you don't confuse these with the mutual company. Write these down, make a flashcard, go back and watch that section in part 1. If anything, you're going to see one question on it, okay? Florida Surplus Lines Service Office. So this is regulated by the Florida Surplus Lines Service Office, FSLSO. More acronyms to know, okay, for reporting and compliance requirements. This is the company who helps kind of manage and monitor surplus lines insurers, right? So there is a Florida Surplus Lines Service Office who handles the reporting and compliance requirements for surplus lines insurers, right? Because they are not admitted and authorized and monitored like all the other insurance agencies and companies and agents. They need to have some kind of supervisory office that is kind of keeping an eye on them, making sure that they're staying compliant, and that is the FSLSO. All right. Residual markets for high risk coverage. There are special markets. Florida maintains residual markets for high risk applicants unable to find coverage in the standard insurance market. So we have the Citizens Property Insurance Corporation. Citizens provides property insurance for high risk properties unable to secure coverage in the private market. So could be um, who would cover an insurance policy for a high risk property unable to secure coverage anywhere else in the private market. It is the Citizens Property Insurance Corporation. Now, um, sometimes other states actually use where they need to be declined by so many other insurance companies before they can apply to these type of programs, but Florida doesn't do that. It's not like, oh, you need to have been declined by X amount of companies. They actually follow like a 20% rule. So all comparable offers of coverage from authorized private insurers have premiums that are more than 20% greater than what is offered by the Citizens Property Insurance. It has more to do with like a special rating tool on how they determine if somebody qualifies for these. Same with the automobile one, etc. So you don't need to really worry about what qualifies them. You shouldn't see an exam question on that. It's more about them wanting to make sure that you understand who who is in charge of writing these policies. If somebody had a hard time getting their homeowner's policy written or their auto policy, same with workers' comp. Okay. So Citizens Property Insurance Corporation, that one covers your homes, high risk homes, if they are unable to get coverage in the private market. The Florida Automobile Joint Underwriting Association, FAJUA, provides auto insurance for high risk drivers who cannot obtain coverage through regular insurers. So this one's going to cover high risk cars. And I have no idea how I would draw workers' comp, but There is a Workers' Compensation Joint Underwriting Association, WCJUA, provides workers' comp insurance for employers unable to secure coverage elsewhere. You could also see an exam question that says, all of these companies provide insurance for people that are unable to secure coverage in the private market, and it includes, and they could name all three of these and then list something else. So just make sure you're comfortable with these terms and what they cover. And basically, the word is written in the title, right? So Citizens Property Insurance Corporation. Florida Automobile Joint Underwriting Association has the word automobile in there. And Workers' Compensation Joint Underwriting Association has the word workers' comp right there. All right. So auto insurance required coverages are a little bit different in Florida than you would see listed in some other states, but the PIP coverage and property damage liability are $10,000. Personal injury protection, PIP, is a minimum of $10,000 coverage, and property damage liability minimum $10,000. Okay. So PIP covers 80% of necessary medical expenses up to $10,000, no matter who caused the crash. And property damage liability covers pays for the damage to another person's property caused by you or someone driving your insured vehicle. But the bodily injury liability requirement for Florida is, this changed in beginning of this year. So $25,000 per person and $50,000 per occurrence. And that's broken down in a lot more detail in your auto sections, but your limits in Florida are $25,000 per person, $50,000 per occurrence, and this is bodily injury. Okay. But they also require the $10,000 personal injury protection and $10,000 property damage liability. And then there's a 14-day rule, 14-day treatment rule. You must seek initial medical treatment within 14 days of the accident for the PIP benefits to apply. So make yourself comfortable with those numbers. And we've got a new time frame here, right? This is the only time we're seeing the day 14 so far. So 14 days to seek medical treatment for PIP benefits to apply. So auto insurance cancellation and non-renewal is going to be the same as we saw when we were talking about property policies. It is 45 days for non-renewal or cancellation for any other reason besides non-payment, but 10 days for non-payment of premium. Uninsured, underinsured motorist coverage, UM/UIM, is optional, but must be offered and rejected in writing. Some states make UM mandatory. Some make it optional. You don't have to do anything else about it. But for Florida, UM and UIM, it is optional, but it must be offered and rejected in writing if declined. So whenever they're writing a new policy, they need to say, hey, do you want this coverage? If the customer does not want it, they need to sign that they decline the coverage. All right, special considerations, motorcycle coverage. Motorcycle coverage is not covered under PIP. It is a separate coverage required for motorcycle-related injuries. Continuous coverage required throughout registration period to avoid license and registration suspension. So PIP does not apply to motorcycles. They need to get a separate coverage specifically for motorcycle-related injuries. So it would be a separate type of insurance for motorcycle policies. Comparative negligence and fault system. Florida's comparative negligence. Florida follows a comparative negligence system that determines each party's financial responsibility based on their percentage of fault. in causing an accident. So how it works. Each party pays damages proportionally to their percentage of fault. Fault percentages are determined through investigation and may be decided by court. And both parties can be partially at fault. Okay, so um, there are certain states where like no at fault or completely at fault, depending on certain situations. But in Florida, they will look at an accident and determine that, hey, both people could have been a little bit at fault, right? And they're going to come up with that percentage, and how that claim is paid out is going to be based on that percentage. So it could be, 20%, 80%. Like, yes, you rear-ended that person, but they braked too soon. I don't know, just making up something. But you do need to know that Florida follows the comparative negligence system, and what the negligence system is. And that is that each party pays damage proportionally to their percentage of fault. And then the 50% rule. A claimant who is more than 50% at fault cannot recover damages from the other party. If 50% or less at fault, they can recover damages reduced by their fault percentage. All right. Now, jumping into commercial property laws and regulations, uh, boiler machinery equipment breakdown. Equipment breakdown coverage provides against sudden and accidental failure of mechanical and electrical equipment. It covers sudden and accidental mechanical breakdown of boilers, machinery, and electrical equipment. Again, sudden and accidental, that's basically what we are always looking for in insurance, right? They don't like to cover things that have been slowly breaking down over time. And we would call that wear and tear. It excludes wear and tear or gradual deterioration. Coverage is for sudden, unexpected breakdowns only. Business protection. It is essential for businesses relying on machinery and equipment for daily operations and revenue generation. It has to be machinery or equipment that has to deal with the day-to-day business and operations to even get covered. It isn't great coverage to have, if it is a company that has these types of machinery or equipments in place, like a printing press. Okay. Again, sudden and accidental mechanical breakdown, it's going to exclude wear and tear or gradual deterioration. This will be gone over a lot more in commercial sections of your courses as well. Adjuster practices and responsibilities. Core adjuster duties. Florida adjusters have specific responsibilities for investigating claims, determining coverage, and negotiating fair settlements under the law. So we need to familiarize yourself with what are the core adjuster duties. This question could be as simple as the following are core adjuster duties, except, and they'll throw in something else. But it would be investigating claims, investigation and evaluation, fair settlement negotiation, and then prompt and accurate handling of claims. They must investigate claims, determine coverage, evaluate damages, and establish appropriate reserve amounts. They must negotiate fair settlements based on policy terms, applicable law, and documented damages. And they must handle claims promptly, accurately, and fairly according to Florida insurance regulations. So it could be an adjuster must do all of the following except and list something else, or it could say prompts must be handled promptly, accurately, and fairly. And maybe they throw in something there like always paid or something, right? Which is not going to be true because some claims are going to be denied. Claims handling goals and activities. Ensures claims handling goals. It ensures timely payment, accurate evaluation, and fraud prevention while maintaining good faith claim practices, right? Good faith claim is, what another reasonable and decent human being would have done in those situations, right? Good faith, doing what's in the best interest of, everyone involved. So insurers need to ensure timely payment, accurate evaluation, and fraud prevention while maintaining good faith. Um, Basic claims handling activities, inspection, documentation, estimation, and communication with the insured through the claims process. They need to go take a look at what is being, what the claim is for, document things, do fair estimates, communicate with the customer throughout it. And those are just basic claims handling activities and the right thing to do. And then settlement and release options, full release, partial release, or structured settlement, depending on the claim complexity and damages. So the payment could come out in one full payment. It could be partial or structured settlement. That's going to depend on the claim and the outcome. Property versus liability adjusting practices. So property adjusting is governed by Florida statute, this number. Claims must be paid or denied within 90 days. We knew that, right? But how long for an insured to send in their signed proof of loss and any documentation? 60 days. Okay. But same thing with the, adjusting, that they've got 90 days to pay or deny a claim. Focusing on damage assessment, repair estimates, coverage determination, and loss settlement. And then liability adjusting investigates liability, evaluates damages, negotiates settlements in good faith, determine fault, assess damages to third parties, negotiate appropriate settlements, but same thing, 90 days to pay or deny. There are a couple different types of adjusters in Florida. So we've got a company adjuster. It's an employee of an insurer who handles the claims on behalf of their employing insurance company. So certain big name companies, Allstate may have its own company adjuster for that area. An independent adjuster, same thing, kind of like an independent agent, contracted by the insurer to handle claims on their behalf. Typically for overflow or specialized claims, this person can work for multiple companies, or, even in that last example I used Allstate, but they may need like a specialized adjuster for this unique situation. They could call in an independent adjuster. And then a public adjuster, this represents the insured, Ed. It represents the customer, okay? Licensed separate by the DFS to advocate for policyholders. Okay, so a public adjuster is there to help the public, protect the public. All right, we have a quick reference sheet here with some of the important timelines and numbers and things that we went over. Obviously, there are more. This is just kind of a nice recap. You can screenshot it. Again, we also have the workbooks that you can fill out that has these, as well as some more practice exam questions and things like that. Claim payment deadline, 90 days. So it's also the claim denial deadline, right? So either pay or deny within 90 days. Non-renewal notice, 45 days. Cancellation for non-payment, 10 days. Cancellation, it's not on here, but cancellation for any other reason besides non-payment is also 45 days. Proof of loss submission from the insured, 60 days. PIP, minimum coverage, 10,000. Property damage liability, 10,000. But the bodily injury was 25,000, right? Per person, $50,000 per occurrence. Hurricane deductible, 2 to 5% of dwelling coverage, and it is a separate deductible. Mold coverage limit, $10,000. Loss assessment, HO6 must have a $2,000 minimum. And premium refund timeline. So when we were talking about the financing companies, the premium financing companies, if there's any money due back as a refund, they've got 30 days to pay. And the comparative negligence threshold, if it is more than 50%, no recovery. All right, we're going to go over a couple practice quiz questions, and then I'll do the answer key after. You can pause it, write these down. I'm just going to read through them, and then we'll go through the answer key. Number 1, property claims must be paid or denied within 30 days, 60 days, 90 days, or 120 days. Number 2, the notice period for non-renewal of a homeowner's insurance is 10 days, 30 days, 45 days, or 60 days. Number 3, the hurricane deductible is typically $500, 1%, 2 to 5%, or flat $1,000. Number 4, sinkhole coverage differs from catastrophic ground coverage collapse because A, it excludes gradual settling. B, it covers gradual settling and structural damage. C, it is included automatically. D, it is not available in Florida. Number 5, the Citizens Property Insurance Corporation provides coverage for life insurance, high-risk property owners, health insurance, or flood policies. Question 6, PIP minimum coverage under Florida auto law is 5,000, 10,000, 15,000, or 20,000. Number 7, the Florida Surplus Lines Service Office regulates health plans, non-admitted insurance placement, workers' comp rates, or home warranties. Number 8, adjusters must handle claims within 10 days, promptly, accurately, and fairly, only after DFS approval or with insurer supervision. Number 9, under comparative negligence, if an insured is 60% at fault, A, they recover 60%, B, they recover nothing, C, they recover 40%, or D, they pay 40%. And number 10, proof of loss must be submitted within 30 days, 60 days of request, 90 days, or 120 days. All right, the answer key. Question 1 was C, 90 days. Property claims must be paid or denied within 90 days. Question 2, 45 days. Non-renewal notices must be provided 45 days before expiration of the homeowner's policy. Question number 3 was C, 2 to 5% of dwelling coverage, which is the hurricane deductible. Question number 4 was B, it covers gradual settling and structural damage. Question number 5, high-risk property owners. Question number 6 is B, $10,000. PIP minimum coverage is $10,000. Question number 7 was B, non-admitted insurance placements, so surplus lines, non-admitted, unauthorized. Question number 8, promptly, accurately, and fairly. Adjusters must handle claims promptly, accurately, and fairly. Question number 9, they recover nothing, right, with the 50% rule. If you're more than 50% at fault, you cannot recover damages. And question number 10, proof of loss must be submitted within 60 days of a request by the insurance company. Here's a little chart to base on what your scores were and where you're at. But obviously, you'd be wanting to do a little bit more practice on these, some more practice exams and questions, but just to kind of give you an idea. All right, so some exam prep checklist tips. Memorize critical timelines, but know the difference. Know hurricane deductibles. Understand sinkhole versus catastrophic ground coverage. Master the non-renewal and cancellation rules. Know the limits. Things like that. Know your PIP and PDL minimum requirements. Master comparative negligence. And that 50-50 rule. Make sure you understand surplus lines and the regulations. Just make yourself comfortable with the numbers and timelines and details that we went over. And you will be well on your way to pass your Florida General Lines exam. So that wraps up this lesson. I hope that this helped make things a little clearer and easier to understand, because that's what we do here at FastPass University. We help you understand, not just memorize. However, when it comes to regulations, you do just kind of have to memorize, but you need to know the concepts behind it. If you found this helpful, please like, subscribe, comment below if you have any questions or you want to let us know when you pass your exam. Don't forget to check out our website at fastpassuniversity.co, that is .co, to download your study guides and workbooks or book tutoring. And if you want to join our community where we do more live classes and instructor support and exclusive courses, come hang out with us inside of the FastPass community on School. That is school.com/FastPass University. The link to all of this will be in the descriptions below. And when you're ready, make sure to watch any other videos that you are related to the exam that you are studying for. Thank you for studying with me today, and I will see you. I'll see you all soon. Let's get you to your Fast Pass.